The long wait for Snowflake's investors is almost over, as this California-based company will start trading on the New York Stock Exchange starting September 16th. After initially proposing a price of $75 to $85 for its IPO, the company has drastically increased its IPO price to now $120. In this video, I'll share the top 5 reasons why I'm bullish about Snowflake stock and why I think this stock is bound to soar much higher. Let's get into it. Number 1, impressive growth rate. Snowflakes has shown a massive growth. According to Okta, Snowflakes was the fastest growing app over the last 6 months, growing by about 80% during that time. Moreover, a Securities and Exchange Commission filing revealed that revenue grew by 174% in its 2020 fiscal year. Such increase could continue to keep this tech stock trading at a premium even after the post-IPO hype fades. Snowflake's value proposition to corporate customers has helped it to produce triple-digit revenue growth, though losses are also multiplying. Revenue grew nearly 175% in the fiscal year that ended at the end of January to reach $264.7 million from $96.7 million in the year ago. In the first 6 months of this fiscal year, ending July 31st, sales again more than doubled easily, moving to $242 million from $104 million instead. Losses did not double in the most recently completed fiscal year, but they came close, moving to $348.5 million from the past loss of $178 million. That said, research shows that Snowflake has the largest net revenue retention rate of any IPO at 158%. Net revenue retention rate shows how much current customers are spending compared with previous spending, and a number that high shows that customers are increasing their spending on Snowflake's product at rates not seen before. This trend is showing up in other ways as well. The percentage of customers spending more than $1 million in the past 12 months has increased to 41% from only 14% in the most recent fiscal year. Reason number 2, competitive advantage. Snowflake's database software places various scattered business data in a single, scalable, cloud-based source. This makes the information reliable and easier to update and also eliminates latency compared to its competition. Although companies such as Amazon, Microsoft, and IBM offer data clouds, Snowflake's software is the only one that can run on all services. Snowflake produces database software that uses the same standards as Oracle Corporation, but can be used in the cloud and scaled up or down as needed, with variable pricing to match. While large US cloud providers like Amazon, Microsoft, and Google offer similar services, Snowflake is the only standalone company offering such software to run on all of their cloud platforms. As customers move toward a multi-cloud setup in which they can purchase cloud computing services from more than one of the large providers, Snowflake can be used no matter which cloud product is running. Reason number 3, strong support from Berkshire Hathaway and Salesforce. Snowflake is projected to produce the biggest initial public offering for a US software company in history this week. The company has received support from Warren Buffett's company, Berkshire Hathaway. Each of the companies, Berkshire Hathaway and Salesforce, have agreed to buy $250 million of stock at the IPO price in a concurrent private placement. This is despite the fact that Berkshire Hathaway's founder, Warren Buffett, has a legendary aversion to young technology companies and IPOs. Therefore, the company's decision to invest in Snowflake tells investors something about how Snowflake is unique and different. Reason number 4, a bankable CEO with amazing track record. In 2019, Snowflake shook up the top of its C-suite and welcomed in the former chief executive and chief financial officer from ServiceNow, CEO Frank Slootman and CFO Michael Scarpelli. The two have worked together through 4 different companies since 2003, including taking on the CEO and CFO roles at ServiceNow roughly a year before it went public in 2012 at a valuation of about $3 billion. ServiceNow is worth nearly $90 billion and joined the S&P index last year. Lastly, reason number 5. A bullish thesis for high-growth cloud stocks. Snowflake is entering a market that's hungry for high-growth cloud software makers, particularly those that have shown an ability to continue expanding through this difficult economical times. Even after pulling back this month, the BVP Nasdaq Emerging Cloud Index, consisting of over 50 publicly traded companies, is up about 55% this year, compared to a 25% gain for the Nasdaq and 5.3% advance in the S&P 500. What's more, Zoom stock is up over 500% in 2020 and Fastly has jumped more than 300%. DocuSign, Shopify, and Datadog have more than doubled as well. This just shows you how bullish the market is around tech and high growth stock, including cloud stocks. Will you be buying shares of Snowflakes at its IPO? Where do you see this stock and its price to be at in the next 6 months? Let me know in the comment section down below. Thank you everyone for watching this video. I hope you found it beneficial. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from it as well. And don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly videos about stock market investing and finances. Hope to see you next time.